This week on Moving Markets, Malaysian glove stocks took a hit as regulated short selling returned to the markets in the new year. As cyclical names start to see some buying, will work from home stocks lose some of their luster. Newly gained Democratic control of the US Senate fuels expectations for more stimulus to support the economy. And at $40,000 US, Bitcoin continues to hit record highs. But how much further can the cryptocurrency go? Malaysian glove stocks began the year under heavy selling pressure on Monday after Bursa Malaysia and the Securities Commission lifted the ban on regulated short selling. This ban was put in place back in March, soon after Malaysia put movement restrictions in place in order to flatten the pandemic curve, like most other countries did. But with that, global markets took a nosedive as uncertainty caused extreme volatility. The ban was part of a series of measures to stabilize the Malaysian equity market, as short selling is speculative in nature and adds additional risk to markets. Because when investors short sell a stock, they're borrowing shares they don't own. But because they believe the shares' prices are going to correct, investors will then buy them back at a lower price for a profit. Now that the ban has been lifted, glove stocks have been a target for short selling, in part because of their stellar performance last year. Top Glove and Hartalega did both see price appreciation of 300 and 120% respectively in 2020. So some investors may think there's money to be made by shorting these stocks. Since the start of the week, Top Glove is down by about 5%, while Kosan Rubber and Hartalega are both down about 10%. Last year, a key sector winner was work from home stock. That's companies like Zoom, Microsoft, and CrowdStrike, which have benefited from the changes brought on by the pandemic. But 2021 has been touted as the year of recovery, especially with vaccine optimism. So will stay-home stocks continue to outperform, or will we see a rebound of sectors which have been the most being down by COVID-19, like energy and finance? Because markets are all about forward earnings and expectations, a rotation into the cyclical stocks has started, since these names are expected to see earnings expansion as the economy recovers. In fact, in our own domestic markets, oil and gas stocks are already up by about 70% from their March lows, while construction and energy stocks are up by about 40%. Although granted, these sectors are still considerably down from pre-pandemic levels. In the US, the yield on the benchmark 10-year Treasury note breached 1% on Wednesday for the first time since March. This comes on the back of the two Democratic wins in the Georgia runoff elections this week, giving President-elect Joe Biden a freer hand to implement economic policy after his inauguration on January 20th. With that, it is more likely there will be increased spending on pandemic relief and economic stimulus. But to fund this spending, the US government will have to issue more debt. So investors are pricing in more supply of US Treasury bonds, driving prices down and pushing yields up. The question is, will that lead to inflation, something we haven't seen in a long time, and force the Federal Reserve to raise rates in 2021? We'll have to watch this space. Bitcoin is racing ever higher, surpassing $40,000 on Thursday, mere days after it broke the 30,000 mark. In fact, just in the past 12 months, Bitcoin prices have risen nearly 400%, while its rival Ethereum is up by over 700%. Cryptocurrency has become increasingly mainstream, with more demand coming from institutional investors, as many see it as a hedge against inflation. Even platforms like Square and PayPal now allow users to buy and sell Bitcoin. But questions still remain about how to value it, and whether it might crash like it did in 2018. And that's what's been moving markets.